All right, folks, we got something to talk about here. A lot of people are upset about Donald Trump's most recent choice for the head of the United States Treasury Secretary. The head of the United States Treasury is, of course, in charge of the Plunge Protection Team, the PPT, as we like to call them. Old Yeller, Janet Yellen, has been fired. Well, she resigned, of course, before Donald Trump could fire her, but I think we can all hear Donald Trump say, "You're fired. Get out." And I wanted to talk to people about this choice because there's a lot of concern because the guy's formerly invested with George Soros and other things of that sort. So I figured let's talk about this and quell some fears here, because I was a little concerned about that as well. And the more I learned about this guy, the more I realized, hey, he doesn't seem so bad. And people need to remember that the rich often know and speak to and work with other mega rich people as well. So I say, don't let that scare you. Let's look into the guy more in depth and see what it is that Scott Bessent is all about. This channel is heavily shorted equities, right? No pun intended there. We're very big on precious metals, tangible assets, heavily shorted stocks and cryptocurrencies. So we talk about a lot about silver and gold, but let's also talk about what this guy really said. Pushing with powder, Janet Yellen wasn't fired only because Donald Trump has not come into office yet. But we all know that Donald Trump already came out and said on multiple occasions that he would fire Gary Gensler and Janet Yellen on day one, as well as many others there. So welcome again, my friends. Let's learn a little bit about the Plunge Protection Team and Scott Bessent. I don't even know if it's Bessent or what the hell, how you pronounce this guy's name, but he is an interesting individual to say the least. But real quick, before I talk about him, this is the Exchange Stabilization Fund's website on the U.S. Department of the Treasury. And they're basically telling us here that they have the power to spend money in any way they want to protect this country's financial markets. And I'll explain that more in depth as well as we go on here. But there's a quick 2 minutes about U.S. Treasury head-elect Scott Bessent talking about a global economic reordering. This guy is against central banks. He is against a lot of things that the average American is against.
Strong feeling is that Chinese have moved tactically to stabilize the economy, but that Xi Jinping is a different kind of cat. That what we saw in the aughts up until 2012 or 2013 was capitalism with Chinese characteristics or communism with capitalist characteristics. He's a Leninist. So he's not going to allow a clearing function in the market that would allow for a sustainable Chinese economy. Then I think we are in a long-term bull market in gold. I think we're seeing reserve accumulation by central banks. I follow it closely. It's my biggest position. And even I was surprised the other day when the Central Bank of Poland came out and said that they want to take their gold reserves to 20%. And you know, Ted, over my career, some of my best investments have been when a policy, when a government, when a management is driving 90 miles an hour at a brick wall, you assume that they are going to hit the brakes. So that's how you get the big policy changes. A couple of times I've been in the car when they've hit the wall. That's less fun. But I think that many of my best investments have been detecting when you're going to get the policy change. And as I said with President Xi, one thing in the Reagan White House used to say policy is personnel and personnel is policy. So you always look at whether it's the management or the policy makers. At the end of the day, they're human. They want to be judged. Some of them are elected. They want to think about how history is going to remember them. So they are very susceptible to external pressure. And many times, if you have an ongoing dialogue with them, if you observe them for a long time, it's easy to detect when they are going to slam on the brakes, which is also a very good risk control metric, because many times something has gone so far out of equilibrium, you get a very good entry point.
Scott Bessent here says, I think we're in a long-term bull market in gold. We're seeing reserve accumulation by central banks. I follow it closely. It's my biggest position. Even I was surprised when Poland said they want to take their gold reserves to 20%. The man is clear. He is pro-cryptocurrencies, pro precious metals, silver, gold, economic reordering. And before we talk more about him, let's speak briefly on this slush fund called the Exchange Stabilization Fund. It's basically nicknamed the Plunge Protection Team because it's akin to a giant plunger. And this plunger is used to make sure that the markets don't crash. And when they do crash, to prevent them from going to zero. Right? So this matters because under current law, the decision on how to spend the billions of dollars in this slush fund belonging to the Treasury Secretary are final to the U.S. Treasury Secretary and may not be reviewed by any other officer or employee of the government. The law provides that the Treasury Secretary, let me just pull this up for you guys can see that. I'm not reading from it, but you can see what I'm talking about. That the Treasury Secretary, with the approval of the president, can deal in gold, forex markets, basically means currencies, and other instruments of credit, securities that the Secretary considers necessary. Publicly traded stocks are securities. Index funds like the SPY and the Volatility Index, the VIX, are securities. That certainly sounds like the Treasury Secretary has the right to intervene in buying up stocks to shore up the stock market, effectively making the Treasury Secretary the head of the Plunge Protection Team. Her right-hand man, when it was Janet Yellen as the head of the Treasury Secretary, was none other than Gary Gensler. Because the head of the Securities Exchange Commission is the number 2 advisor there to the Plunge Protection Team manager. So as you can see here, the ESF was originally created to stabilize the international value of the dollar following the collapse of the gold standard. Under the Tripartite Agreement of 1936, the Treasury used the Plunge Team to guarantee daily exchange rates under which it converted the dollar holdings of France and the UK to gold. Because the use of the fund was left at the broad discretion of the Secretary of the Treasury, it proved highly adaptable to changes in the international monetary situation. Over the course of decades, governments have repeatedly used it for urgent defense against dollar crisis until long-term solutions could be found. The fund also extended loans to foreign countries in the interests of the United States. So you can see they've used it to provide billions and tens of billions of dollars in currency swaps and loan guarantees to Mexico following the 1994 economic crisis. They have used the ESF to circumvent the need for approval of the legislative branch. They have spent hundreds of millions and billions of dollars in artificially propping up financial markets in the United States. After the bankruptcy of Lehman Brothers in 2008, when there was a massive run on money market funds, the Treasury Secretary at the time, Henry Paulson, offer to guarantee those MMF, those money mutual funds, using the Plunge protection team's money, the billions of dollars in the exchange stabilization fund. So here you can see it says nearly all money market funds accepted the offer, helping to calm the market. The funds paid $1.2 billion in fees for use of the guarantee program, and ultimately no guarantees were paid, but Congress prohibited the use of the fund to offer such guarantees in the future. So that is not going to be something that can be used again. You can see here in 2020, in relief to the scam-demic, Congress temporarily removed the restrictions on the ESF and made an appropriation of $500 billion. And $46 billion was available for loans or guarantees to air carriers and industries critical to national security. So I'll explain to you guys that on March 20th of 2020, the Dow Jones Industrial Average lost over 7,500 points by the end of the day as the scam-demic crisis escalated. And by the 23rd of March, just 3 days later, the S&P 500 had plunged 30% in just 22 trading sessions. That was the fastest decline in history, noting further that the second, third, and fourth quickest 30% pullbacks all occurred during the Great Depression in 1934, 31, and 1929, respectively. So the ESF operations here are conducted through the Federal Reserve Bank of New York in their capacity as a fiscal agent for the Treasury. So the New York Fed shares that the ESF accounts and activities are subject to congressional oversight, but the Treasury provides monthly reports on U.S. intervention activities and a monthly financial statement of the ESF to Congress on a confidential basis. They don't have to explain why they've done it. They just have to give the report to them, and then Congress can't do anything about it as well. So looking into Scott Bessent, we see that Trump said he will appoint them, right? You know, Wolfie brings up a good point. He's like, for me, it's like watching a Michelin star chef in regards to Donald Trump making appointments. Says, and Scott Bessent as the U.S. Treasury Secretary, let the man cook, and then when it's ready, enjoy the meal that's been presented. Great point, my friend. Hey, Typo Negative, welcome back to the channel. Maddie Vision, Eagle Eye, Headstock. Ladies and gentlemen, Sue Ray, cheers, my friend. Bessent earned it. He was a key economic advisor in recent months with great ideas and 100% pro-Trump. When you hear here shortly why he became pro-Trump, I think it's really going to open your eyes a lot. Some of his key ideas were to create a shadow role next to Jerome Powell. Think about how powerful that is. Jerome Powell right now has way too much power as the head of the central bank of the United States. The Federal Reserve never should have had in the first place. So one of Bessent's ideas here is to create a shadow role next to Jerome Powell, who predicted GDP growth of 3% following the implementation of Trump's policies and suggested using tariffs as leverage to get these concessions. Escalate to de-escalate. Donald Trump's not even in office yet, and we've already seen that work with Canada and Mexico, who, per Trump's order just the day before yesterday, when Trump said, we're going to put 25% tariffs on Canada, 25% tariffs on Mexico until they stop letting illegal immigrants cross our border. What happens? Less than 8 hours go by, and Trump gets a call from Trudeau and from the new Jew in power in Mexico. I'm going to call her that because I don't really believe that she was actually voted by the Mexican people. Let's put it that way. So I won't even say her name. That's, well, we give up. Trump, you've got us. You've got us, Trump. We don't want these 25% tariffs against our country. It will destroy our economy. We need to do business with the United States. Please don't do that. We're going to stop sending illegal immigrants to the border right away. These are, in one day, Trump accomplished what the Biden and Harris administration refused to do over the last 4 years. And he did so before even taking his seat in the presidency, before his inauguration. Don says, I'm not selling even if they fired Janet Yellen. He also won Bessent, despite his rivalry with Howard Lutnick and Elon Musk's public support for Lutnick. Because again, Elon Musk serves at the pleasure of the president. The president doesn't serve at the pleasure of Elon Musk. Keep that in mind, people. Keep that in mind. Bessent stood up to Wall Street opposition and defended Trump's tariffs on TV and in writing. Trump called him one of the most brilliant men on Wall Street. Bessent is 62 years old, founder of hedge fund Key Square Capital Management. He was the former chief investment officer at George Soros's Soros Fund Management from 2011 to 2015. And a lot of people are scared by that very fact. And I think it needs to be said that people need to judge a man by his actions, not just by what he has accomplished in the past. This man rose to high levels of power and money management and has managed billions of dollars in assets. Not to mention, while doing so, completely undercut the Bank of England, the central bank, the Bank of England, in one of his trades, and showed that even though he was working with people like Soros, he actually made a difference. And has
strong feeling is that Chinese have moved tactically to stabilize the economy.
1 second.
What is the figure you think is realistic if all of these tax cuts are implemented, if we're to grow our way?
At the same time, here we go. So let's talk about what he has to say about the federal budget of the United States and Trump's plan to decrease government spending.
What is the figure you think is realistic if all of these tax cuts are implemented, if we're to grow our way out of this? What does that translate to in annualized GDP growth?
Well, for annualized GDP growth, I think, like under Trump 1.0, that we can get moved back towards 3%. But right now, our GDP growth, and I find this very interesting that we're hearing that Kamala Harris is the one who is going to have some kind of budget rectitude, because I will tell you, I am very concerned about what is happening right now. We have never had a budget deficit like this. We are at 7% of GDP in terms of the deficit. We've never had this when it's not a recession, not a war. And what do we have to show for it? We have they have created 18,000 manufacturing jobs. Last year, the economy.
What is the figure you think is realistic if all of these tax cuts are implemented, if we're to grow our way out of this? What does that translate to in annualized GDP growth?
Well, for annualized GDP growth, I think, like under Trump 1.0, that we can get moved back towards 3%.
So he's saying that we can decrease federal government spending and increase the GDP of this country, and not have the GDP of the United States be solely propped up by government spending, because that's what's happening right now under Biden and Harris administration. For those of you that don't know, in case you care, which I don't, as most Trump supporters don't, but the fact is that many people called Trump a racist, a sexist, a misogynist. And for somebody who was claimed to have been this by so many mainstream medias, he's hired more gay people, people of color, and women than anyone could have ever imagined. So maybe, just maybe, the mainstream media is lying to you. Scott Bessent is a gay man, married, and a father of two. I guess Trump isn't as anti-LGBTQ as many on the left tried to convince us, says Mr. Action. Liberals hate America first, and that's exactly who Trump is. I want to play this for you here.
Square Capital Management CEO Scott Bessent to be his Treasury Secretary. Bessent is the founder of Key Square Capital Management. He's a hedge fund manager who lead the Treasury Department. He has been really one of the finance world's most vocal supporters of President-elect Trump, and he has been an advisor, a key economic advisor to the President-elect and his team, talking about economic policies. He has suggested to the President to pursue a 3-3-3 policy, in other words, cutting the budget deficit to 3% of gross domestic product by 2028, spurring GDP growth by 3% through deregulation and producing an additional 3 million barrels of oil or its equivalent a day. He is seen as a key economic advisor, and now, after a long process, which took some time to find a Treasury Secretary, Scott Bessent, the hedge fund manager, is the pick for President-elect Donald Trump.
I can think of nobody better to help manage the United States money than a hedge fund manager who has decades of experience managing billions and billions of dollars. This is exactly what we need in this country. Not a lawyer like Jerome Powell, not a liar like Janet Yellen. Hey, Ellie, welcome back to the channel. Ellie says, I hope everyone is having a good Thanksgiving week. Many things to be thankful for, and we're excited for next year. What's going on? Airplane mode, Dan Torres. Thank you again, everybody, for your support of the channel and for being here with us today. We're taking this in-depth look into who is Scott Bessent. What is he all about? What is his background? What is he going to be doing here as the U.S. Treasury and head of the Plunge protection team? So here he gives one of the best explanations that I've seen as to why the Democratic Party has tried to destroy cryptocurrencies. And it very much appears that they're trying to distract from the fact they're taking hundreds of millions of dollars in illegal donations of stolen FTX customer funds from Sam Bankman-Fried. If you've been with us for a while on this channel, you guys know exactly what we're talking about. We've spoken about this in depth long before any of you guys and even I had heard of Scott Bessent here and what he's been doing, right? There's thousands of hedge funds, and I don't know every single hedge fund manager, Scott being one of those. But the more that we learn about him, the more we realize, hey, this guy's thinking and saying the same thing that we've been saying for years in regards to political donations and slush fund money being taken or stolen by politicians, cryptocurrencies and stocks being attacked at the behest of retail investors. Because at the same time, every time that happens, retail investors get the shaft.
I've been excited about the president's embrace of crypto, and I think it fits very well with the Republican Party, the ethos of crypto's about freedom, and the crypto economy is here to stay. The Democrats are running from it because they're trying to wash off the stench of Sam Bankman-Fried and his family's donations to the Democratic Party. So they're willing to take down a whole industry because of bad behavior on their part, bad behavior one actor, and I think that everything's on the table with Bitcoin. And to me, one of the most exciting things about Bitcoin is for a generation of investors who maybe post the great financial crisis have been looking for investment opportunities, or maybe they'd soured on markets. Crypto is bringing in young people. It's bringing in the people who haven't participated in markets, and having a market culture
in the U.S. and people believing that markets work for them is a centerpiece of capitalism.
Let's listen to what this guy is saying clearly. He's just because he worked with Soros from 2011 to 2015 managing his investment fund doesn't mean that he subscribes to helping the Democrat Party continue to be in power like Soros has done for so long, like the Rothschilds has done for so long. One can work with other people that have opposing political views. At the end of the day, they work together to make money. Bessent didn't work with Soros for the purposes of installing Hillary Clinton or Biden or Kamala into power. Think very clearly about what he just said.
I've been excited about the president's embrace of crypto.
He's talking about
and
Trump.
I think it fits very well with the Republican Party, the ethos of crypto is about freedom, and the crypto economy is here to stay. The Democrats are running from it because they're trying to wash off the stench of Sam Bankman-Fried and his family's donations to the Democratic Party.
You guys have been watching this channel for a long time. You know that Sam Bankman-Fried donated hundreds of millions of dollars through a money laundering scheme here to the political party with many, many Democrats. And he did that to buy them. He did that to buy them and for them to launder money together. And as he continued to give them money, well, they continued to support him and let him do whatever he wanted. And that includes giving market makers and broker-dealers and family offices and hedge funds the ability to short your favorite companies without actually owning any shares. FTX never held the shares of GameStop or AMC stock that they claimed they did. When they went bankrupt, we saw all of their financial documents, and there was not a single fucking share to back up all of the tokenized securities that they made to lend out to the market maker, to the broker dealer, in order to allow them to short stocks like GameStop and AMC. These TSOs, tokenized securities, were used as a way for FTX to make a shitload of money in cahoots with the brokers, the market makers, and the hedge funds and the family offices. They were well aware, Sam Bankman-Fried and Citadel were both well aware that these stocks, these TSOs, were not actually backed by the underlying asset. They may have been at one point very briefly, but for years there was zero backing of the underlying asset. But FTX made money off of it. The Democrat Party made money off of it. Allegedly, market makers, broker dealers, and many others made money off of it as well. And I think it has been proven that that's exactly the case.
So they're willing to take down a whole industry because of bad behavior on their part, bad behavior on one actor. And I think that everything's on the table with Bitcoin. And to me, one of the most exciting things about Bitcoin is for a generation of investors who maybe post the great financial crisis have been looking for investment opportunities, or maybe they'd soured on markets. Crypto is bringing in young people. It's bringing in the people who haven't participated in markets, and having a market culture in the U.S. and people believing that markets work for them is a centerpiece of capitalism.
The man is pro-retail, pro-crypto, pro-tariff. He may be gay, but he's pro-family values, because that doesn't matter. That doesn't make somebody pro or against family values just being gay, right? What matters is their own internal thoughts and feelings. There's a reason he sided with the Republican Party for so many years now. This man, Scott, has railed against the United States debts and reckless spending by the Biden and Harris administration. This man has proven that he wants deregulation in government and tax reform for the American people. His positions on deregulation and the privatization of this economy should bode very well for the 99% and the richer people in the United States as well. Mostly all American citizens.
I don't believe in credentials. On a podcast in October, I actually came out and said I would never hire a Harvard undergraduate again. I think it is a failed credential. So, but back to your point, how did all these people fall for it? I think it was the high status of his parents. If you were to look at the investment memos, they were saying, oh, his parents are Stanford law professors. It's this, it's that. Whereas if his father had been a truck driver from Ohio, he wouldn't have gotten the same pass. I think it's shocking that Michael Lewis, who really made his career or started his career lampooning the excesses of Wall Street and liar's poker, completely fell hook, line, and sinker for what Sam Bankman-Fried was selling. And, look, I think it's Michael Lewis probably needs to leave Berkeley, California, and go back to New Orleans for a little while and get in touch with the street, not the Berkeley PhD program.
Welcome, John Paul. You can see this guy is literally talking shit about Sam Bankman-Fried and Wall Street and how they made such idiotic decisions and got blindsided by the fraud from Sam Bankman-Fried. The guy spoke a good game and used his parents to get in with people, to get them to believe that he was doing something that was worthwhile. When in reality, he was defrauding everybody, and now he's going to spend the rest of his life in prison, which I think SBF deserves much worse for the way that he harmed everybody. And that really, to see this guy, who is a Yale graduate, say that he would not hire a Harvard undergrad, kind of tells you a lot. It really speaks volumes here onto who this man is. So, yes, who said that right there? Soros is big mad at Bessent. I can't read your name, but I agree with you there. I agree with you. Yeah, Soros is probably not happy at all. Matty Vision says he left Soros. Yes, he did. Here is an interview where Bessent, the former Soros Fund Management CEO and Trump advisor, talked with Maria Bartiromo on Fox News, of course, in October about tariffs, Trump's new economic policies, his own work with George Soros, and the politicized Federal Reserve. And I think it's pretty clear that this man is saying a lot of things that most people agree with. He's not a political tool like many thought that he would be. He is not pushing the George Soros agenda. He is not pushing the Democratic Party's agenda in any way.
Federal budget, which I also raised in that interview, is saying.
And he's also not pushing the bullshit that people have seen from Wall Street over the last several years, let's say.
That his economic proposals would add $7.5 trillion to the national debt over the next 10 years. Harris adding $3.5 trillion. Let's talk about this. A Bloomberg survey finds most economists do believe the outlook for inflation and growth in the U.S. would be roughly the same whether Trump or Harris wins the election. Me now is former Soros Fund Management Chief Investment Officer, Key Square Capital Management CEO and founder, and Trump donor and advisor, Scott Bessent. Scott, good to see you.
Always good to see you, Maria.
What do you make of the way Trump is explaining these tariffs now? He got into it yesterday at the Chicago Economic Club, but it was exactly what he told me on Sunday. And what I took away from it was that it's a threat to keep adversaries at bay.
Yeah, Maria, we can see from yesterday that Donald Trump's ready on day one. When he wins, January 20th, he's going to hit the ground running, and it's going to be a growth agenda. Tariffs are going to be part of that. I mean, what other political candidate could go toe-to-toe for an hour with the executive editor of Bloomberg News? I mean, it was fantastic. It was a tour de force. And Donald Trump has added a new a new leg to the Trump stool. Alexander Hamilton loved tariffs. He was the original tariff man, and he did it to raise revenues and to protect American industry. Donald Trump has added the negotiating leg. And I think, given Donald Trump's credibility on tariffs from Trump 1.0, he will hit the ground running on 2.0, and world leaders and business executives will know he means business.
I want to get your take on the kind of growth he's talking about. I mean, when I spoke with him on Sunday, it was after the speech he gave in Detroit, and he was talking about triggering a revolution for the auto industry because of this very notion that they're going to be able to do what they're doing and make cars in America. Do you think companies are actually going to say, yeah, okay, I want that 15% tax rate, I'll do everything in America, even though it's going to be more expensive for them?
Well, look, it's after-tax cost. That's what drives everything. That's why the Tax Cuts and Job Act that was passed in 2017, that we've got to extend again. It is the after-tax return on capital.
I need to interject here really briefly. This man just mentioned the Tax Cuts and the Jobs Act of 2017. I want you to know that Lit Exchange is an upcoming stock and crypto brokerage. We are using the Jobs Act in order to give you the opportunity to invest and own equity in a company before it launches, before it IPOs, thanks to the Regulation CF exemption created and allowed by the Donald Trump administration in 2017 through 2019. So this is the first time in the history of the world that any upcoming stock and crypto brokerage firm, Lit Exchange, is giving non-accredited investors, you guys and girls, the chance to own and receive benefits and have the potential for massive, massive profits. These opportunities are always reserved in the past. These opportunities have always been reserved for accredited investors only, for hedge funds only, for family offices only. And we are giving you, the retail investor, the chance, under the Jobs Act created under Donald Trump, the opportunity to own part of the company and receive pre-IPO buyer's rights of additional shares should you choose to do that, and many other benefits that are also included. Big shout out to Donald Trump, Scott Bessent, and the opportunity for us to be able to let retail own the company instead of being forced, like other firms such as Robinhood, to go get money from Sequoia Capital.
That drives productivity, it drives job growth, and that is what drove real wage growth for working people under Donald Trump's first term. We're also going to have a massive deregulatory program, and we're going to have energy dominance. So cheap energy, deregulation, and a low tax rate. What's better than that?
Well, this is a beautiful way that you said it, because the deregulation is a really important one. I mean, a lot of people talk about Kamala Harris not having the sophistication that Donald Trump has with regard to the economy. And I agree with that. I mean, talking with Donald Trump, you get this sophistication. He understands what's going to move things. But the regulatory environment is something that Kamala Harris has not been pushed on. I mean, you could do all sorts of things to the oil industry to keep oil production down. It's not just about fracking. and it's about regulation. So what do you think are the most onerous regulations right now that Trump needs to undo?
Yeah, and Maria, before I give you the list, sophistication is the exact word.
Yeah.
Donald Trump, everyone says, what are you advising Donald Trump to do? I said, I don't have to advise him to do anything. He already did it.
Yeah.
I could tinker around the edges, but he has a vision. But look, when you think about the energy industry, Senator Sullivan from Alaska said Biden administration has sanctioned us more than they've sanctioned the Iranians. They've sanctioned us more than they have the Iranians.
That's right.
That's
there are
messed
hundreds of thousands of pages that have been added to the federal regulatory register under Biden and Harris. It's more big government, and that's what kills productivity. John Mngr yesterday said, well, you'll shrink the economy if you have fewer illegal border crossings. You shrink the economy when you add more regulations.
Yes.
There's an estimate that over 10 years, it's costing us $400 billion.
Yeah, and a lot of those regulations are around her climate change agenda and new rules for emissions and new rules for the climate change agenda, which he will undo. Look, I want to get back to
$400 billion is a conservative estimate in the amount of money that it's costing our country every year to allow our borders to remain open. I'd like to say big shout out and hello to Queen Bee, to Jaina, and Mama Bear. Welcome, ladies, again to the channel. It's always wonderful. It's like family in here. It's beautiful. Anne asks, can we be a part of Lit Exchange if in England? Yes, ma'am. You absolutely can. This is open to people from most countries around the world. We have investors in Lit Exchange from the UK, from Germany, from the United States, Canada, and other countries throughout Europe, Asia, and the United States.
Economics in a moment, but I want to get your take on George Soros. I don't think people really ask you these questions, and I want to get your take because you've been kind enough to sit with me for so many times talking about policy. Tell me about your involvement with George Soros. Do you understand his motivation for some of his social agenda, like funding DAs that will not prosecute crime? I mean, opening the doors for these criminals to get back out on the streets immediately. What did you do for Soros, and what is his motivation, in your view, having been there at probably the most important time in his, global career, and that is with the devaluation of the British pound?
Yeah, so, Maria, it's very interesting that the Soros CIOs have a history of Republican giving, whether it's myself, Stan Druckenmiller, Bob Bishop.
Interesting.
That we've all been big Republican supporters and donors. And, I can't speak to George's motivations on the political side. I could say he's one of the greatest investors of all time. And what George really understands is how systems accelerate and then how they collapse. And, he's done that again and again in the financial markets. And unfortunately for the conservative movement, he has now applied that to politics. And you know what? Shame on us for not understanding that a little bit of money in these Democratic races could make the difference.
Wow.
So I've taken my resources, and many Republicans are pushing back against this, whether it's at the school board level or the DA level. And we're going to take back law and order. We're going to take back our schools.
Yeah, I mean,
Listen to that. Don't believe the crap you hear about Scott simply because more than 10 years ago, 14 years ago, the man used to work as an investment officer for a George Soros fund. He does not have the same agenda. Most Republican CIOs, as he just mentioned, are actually on the opposite end of the spectrum from Soros. And he's come out and said, it's a shame that Soros is doing those things. And more Republicans need to come out in support of taking back our schools, taking back our country, and making it better for people in the center and the conservatives all around. I think, like many of you here, I used to be what was considered on the left. But those goalposts have been moved so many yards or even miles to the left that the vast majority of people, as has been proven by the most recent election in the United States, The majority of Americans voted for Donald Trump. Not because they love Trump, not because they agree with everything that he says or does, but this fact that this country needs an overhaul in the financial sector, in the geopolitical sector, all around the world, all around the country. We need to look after the people in America before we can worry about everybody else. Because sending money to other countries, letting other people from other countries just waltz on in here and then giving them money while not taking care of the veterans and the single mothers and those people that have paid into our system for their entire lives is not benefiting the majority of taxpayers. And the people voted with their wallets, they voted with their hearts, they voted with their brains, and have come to the conclusion that we need to take care of ours before we can take care of somebody else. You can't pour from an empty glass. And that's what's happening. America needs to refill its glass before we can fill other people's.
And you were there at the height of George's career. Was he always this political? Final question on this.
He was very involved in bringing down the Berlin Wall. He was involved in Eastern Europe, and this migration to the U.S. You'd have to ask him why he did it. Everyone asks me, how could you work there? And I say, the most anti-communist people are people who grew up in communist countries. So, I'm trying to use my resources to push for the American vision I have. He can push for the American vision he has, and that's the way the system
it's really
works.
Interesting that Trump relies on your advice so much, and you spend so much time at what you would consider an enemy of Donald Trump. But let me get your take on the broader sentiment out there. Markets have been rallying on this idea that the Fed will, in fact, engineer a soft landing. Maybe we won't go into a recession now. What's your take?
I think that they're not engineering any landing right now. They've taken away their optionality.
That's right.
I thought that this jumbo rate cut was highly inappropriate.
Yes.
Donald Trump gets lots of questions about politicizing the Fed, and Jerome Powell politicized the Fed doing a jumbo rate cut this close to the election. There's no scenario where you had to cut 50 basis points right away. The economy, unless he knows something that we don't know about the economy, and they are going to be in a real predicament if the economy accelerates, because since they have done the jumbo rate cut, the bond market, the 10-year bond, has gone down in price, up in yield almost every day.
I'm trying to figure this out.
Just as we've said on this channel, we said it yesterday and the day before and the day before and the week before. The rate cuts by the Fed were a massive mistake. To hear Scott Bessent saying those things for the first time, by the way, I'm watching this video with you guys for the first time because I wanted you guys to get my live reaction, my real thoughts on who this man is. I'm learning about him at the same time as you guys are. And I really, really like what I see here. The Fed made a huge mistake, and Scott is bringing it all right to the forefront. He has no problem calling out Jerome Powell, saying Jerome Powell has way too much power. There's way too much manipulation. He has politicized his position at the Federal Reserve for the purposes of trying to make everything appear like it's all fine and dandy, and we're having a soft landing. They are manufacturing absolutely no landing. And that's right. That is the worst possible thing that could happen. A hard landing is better than no landing, because that leads to stagnation in our economy and more inflation. That is literally the definition of stagflation. A couple questions that were asked. Tanel Perind says, boss, I've been waiting for a breakdown like this. Cheers, my friend. I am happy to provide it, and I'm glad, because I think we need to go over and learn this stuff together. Delayed Noise says, I feel like most people were more on the left until now. Yeah, and you know what the problem is, Delayed Noise? We haven't changed. Our views haven't changed. People want to be gay? Cool. You want to have kids? Cool. But don't try to indoctrinate my children. Don't try to castrate them. Don't try to shove everything down their throat, and don't try to take away my fucking guns. I have a right to protect my family. There's a lot of things here that are happening on the left that hasn't changed what other people feel. It's just changed what's been portrayed by the Democratic Party to be so far left that where people used to sit even though they haven't gotten up from their seated position, is now more in the center or closer to the center side of left than it ever was now from far left field. Let me see here. Samony says, same here, more of a social liberal myself, but the Dems' asinine economic policies and sexual debauchery drove me away. 50 basis points, this jumbo cut is an emergency level rate. Historically, why? To help out the big banks and to politically assist the Democratic Party. But in reality, it was a massive mistake because as you guys have seen this month, inflation is ticking upwards. And as you will see on Wednesday, the first Wednesday of December, when the Fed CPI numbers comes out, when the core price index and the PPI number comes out, the producer price index, you will see that manufacturing costs are going up, that inflation costs are going up, and that will all lead to a reduction in the rate cut for December, if not an elimination of a rate cut entirely. The Fed got ahead of themselves. They made a huge mistake, but it wasn't really a mistake. It was more purposeful. They did it not caring that inflation was going to go higher, not caring that it's going to invisibly tax the American people. Another question, Ann says, what about transferring shares from UK broker to lit exchange? Can this be done? Well, Ann, we are first working on getting everything set up here in the United States, and then we will be working our way to the United Kingdom, Canada, and other European countries as well, and then eventually South American countries as well, to provide people in many countries the opportunity to trade on lit markets.
Price up in yield almost every day.
I'm trying to figure this out. Why is it that rates are going higher in an environment when we're told rates are going lower?
The Fed fucked up.
They're taking short-term rates down. 3- and 5-year inflation expectations are up, and you keep hearing that Donald Trump 2.0 is going to be inflationary, which is absurd. We know what a Trump 2.0 is going to be from Trump 1.0, and inflation was very, very anchored around 2%.
1.6 to be exact.
There will be a growth shock. There will not be an inflation shock.
Scott, are you expecting to be in the cabinet should President Trump win this?
I'm expecting that President Trump's going to win, and that I would like to help any way I can, inside or out. But there are no jobs if he doesn't win. So November 5th, after that, we can see.
Look at that. See, this interview was done before the election, before Scott Bessent was chosen to be the U.S. Treasury Secretary. And I really, really like everything that I'm hearing out of this guy. And it's not just what he says, it's his actions. His actions have proven that he is on the right side of history with the rest of the majority of Americans that have voted to preserve our families, to preserve our schools, and to make this country better. Here you can see a former New York Fed president, Bill Dudley, discussing the challenges that the U.S. debt can pose for Scott Bessent at the U.S. Treasury. And I will say one thing. I do disagree with Scott in him saying that he doesn't believe that inflation will see a resurgence. I have to disagree with that. But the amount of cutting that the Department of Government Efficiency, headed by Yellen and Vivek, are going to propose, along with Ron Paul, going to propose to the Trump administration, is going to cut a lot of the BS out, and that will absolutely help the situation that we're seeing now in reducing inflation, because it's already on the way up because of the ridiculous amount of spending that's occurring by the Biden-Harris administration. They continue to print like it's going out of style.
Let's get to those 3 points you make. Managing the Treasury market, the fiscal trajectory, and the broader economy. Of those three, Bill, what do you think is the biggest task?
probably managing the fiscal deficit, since the Treasury Secretary doesn't have responsibility for tax and spending policy. He can opine on it, but can he actually get it through Congress and get the administration to support it? So I think we're on a trajectory right now where it's 6% of GDP deficits as far as the eye can see. And President-elect Trump has proposed things that will expand the deficit as opposed to contract the deficit. So I think that the fiscal outlook longer term is probably the most challenging thing that he faces.
Bill here is talking about tariffs expanding the deficit, but Bill is also not mentioning the amount of cutting that's going to go out. For example, the Department of Education can be cut immediately, and that will save $700 billion. No, I'm sorry, I'm a liar. That will save around $600 billion per year. The federal government, 62% of all that money from the Department of Education goes to paper pushers that work at the Department of Education. I'm not talking about administrators at your kids' schools, but I'm talking about people that work directly for the Department of Education, not for schools. So they can take that $600 billion, give half of it, $300 billion, directly to all the schools in the country, save $300 billion, and every single school would be receiving more money than it is receiving right now. And it would still save $300 billion in annual government deficit spending. And what does that do? It reduces inflation. It gives your kids' schools the power, and the states that you live in, the power to more properly educate your children. Because this whole No Child Left Behind bullshit by George Bush Jr. back in the 2000s was a travesty. No Child Left Behind was the beginning of the end of the education system in this country. And then Barack Obama went ahead and further crushed it even more so.
It gets some say on the maturity profile of US Treasuries. What's your take of what's developed under Secretary Yellen at the Treasury, and what changes would you anticipate in the years to come under Bessent?
Well, things didn't move a lot under Yellen. I think the maturity structure shortened a little bit. The Treasury typically doesn't want to move around the Treasury issuance calendar a lot because it basically unnerves market participants. Irregular and predictable is sort of the watchword of the Treasury. So I would be surprised if Bessent did anything that significantly changed the maturity structure of the Treasury debt. I think the biggest problem he faces is to convince his colleagues in the administration that we need more tax revenue, we need to control spending, and that requires making some difficult choices.
Bill, if you were still on the Fed,
Hence the
how would
Department
you
of
think
Government
about some of
Efficiency,
the
cutting
policies and the
spending.
personnel that have been implemented or announced so far, and factor that into your outlook for next year? You have to come out with a forecast. You got to make a dot next month. How do you even begin to do that?
Yeah, so far the Fed has been very silent about President-elect Trump. There is nothing, for example, in the minutes about the election and the new policy mix. I think, to the extent that things get priced into financial markets, it's sort of hard for the Fed to then ignore them, because if you have prices embodying a certain expectation, how do you not include those prices in your forecast? Back in December 2016, the Fed staff put a big fiscal stimulus in their forecast for 2017. So when Powell says we don't assume, we don't speculate, we don't guess, the reality is if the markets start to judge that something's highly likely, then the Fed has to sort of take that on board in terms of their own thinking. I think the biggest issue in the very short term is what's going to happen to tariffs, because if tariffs are raised to any close to the degree that President-elect Trump is talking about, it's going to be inflationary, it's going to be bad for growth, it's going to be bad for productivity.
One thing he doesn't mention is the fact that Donald Trump doesn't even have to institute the tariffs. He's not even inaugurated as president yet, and he's already getting Mexico and Canada to bend over and stop sending immigrants into the United States illegally. And he did so in one day, just by threatening tariffs. He didn't have to institute a single tariff. The difference is here, if Donald Trump were to go ahead and institute massive tariffs on other countries and eliminate the income tax, it would force companies that have previously offshored jobs and sent jobs to China and Mexico and other countries to bring them back. Companies would be forced to bring back those jobs to American soil, give those jobs to American citizens, that would increase the GDP of the United States, increase wages and salaries in the United States, increase spending in the United States, increase the GDP of the country, and increase the bottom line of everybody associated with that industry. Not to mention, you'd have a lot more spending money in your pockets if you didn't have to pay income taxes. You'd have a lot more money in your pockets if you didn't have to pay, or if you didn't get taxed on your Social Security if you're receiving Social Security benefits. You'd have a lot more money if you weren't taxed on your tips. You'd have a lot more money if your overtime wasn't taxed. Thankfully, most of that is coming to fruition here soon, and there's a good possibility that a lot more that we yet don't know about comes into fruition. And as Scott Bessent was mentioning earlier, in terms of Alexander Hamilton is one of my idols. That's why you guys have seen me play the music from Hamilton, the musical, here on this channel in the past. I'm not throwing away my shot. And voting for Donald Trump was a big part of our shot here. And now it's time for Trump to enact a lot of the same tariffs that kept this country afloat from the 1700s all the way through 1913. 1913 was when income tax was implemented for the rich, of course. And then only 2 years later, everybody had to pay those income taxes. So hopefully Donald Trump gets rid of the tax on Social Security, overtime, and tips as promised. Hopefully he gets rid of the capital gains tax on crypto as he's promised. And as he's hinted at, getting rid of the income tax and implementing tariffs, that would be excellent, because then you would actually only pay taxes on what you use and what you buy, instead of just paying taxes on every penny that you make.
And President-elect Trump's talking about putting on tariffs on China, Canada, Mexico, on day one. So that's probably the thing that's going to happen most quickly. The fiscal stuff is going to take longer because the tax cuts don't expire to the end of 2025. So that's probably more of a 2026 story.
You said that tariffs are going to be inflationary. We've heard some disagreement about that around this table. Some people say that maybe in the very short term there's a one-time price increase, but longer term tariffs have been shown to be disinflationary time and again. Why do you think that that's not going to be the case?
Well, they're disinflationary to the extent that the people who are buying these now more expensive goods don't have as much real income, and so they can't buy as much, and that hurts the growth rate of the economy. So there is a effect on growth. The key question of tariffs is, when prices go up, do they get into wages? The first Trump term, the increase in tariffs was well advertised, but the magnitude was actually quite small. It went from about 1.5% of imports to 3% of imports. The magnitudes he's talking about this time are much, much larger. So the price effect will be much greater, and I would expect that at least some of that will get into wages. And if it gets into wages, then it keeps going. It's not a one-time effect.
Bill, do you think that because of the uncertainty around policy and the potential for some of these policies to be inflationary, do you think on the margins that could push more members to really want to go even slower when it comes to rate cuts?
Eventually. I think right now the Fed's still on monetary policy is restrictive. The dual mandate objectives of employment and inflation are roughly in balance. We need to head towards neutral. And so I think they're still on a trajectory to go towards neutral. But I think, as they've said more and more recently, carefully. So December is not a done deal.
All right. I heard about enough for this guy and his skewed ideas here. He is, of course, the Bloomberg Economics Senior Advisor, former New York Fed president. Mentioned a lot about how tariffs would increase inflation, but didn't mention how cutting taxes would help offset that. So I'm very much seeing a one-sided analysis here from Bloomberg, which is not exactly surprising, especially when you hear everything that Scott Bessent has been saying about George Soros, about Soros' support of the Democrats, and Bessent's support of Republicans. They're absolutely on absolute opposite ends of the spectrum. And Tony here says Scott Bessent is a savage. I like the guy. He rips on the elites, says he wouldn't hire a Harvard undergrad, and unleashes on Michael Lewis for getting blindsided by SBF's fraud. And I got to say, I'm with him. I'm with him on it a lot. I definitely like what's going on here. So I think that's about enough information on Bessent directly from him and from other people, and things that he's done in the past, things that he plans to do in the future, in order for me to make an informed decision. And that decision is that I really like this guy. I don't care if he's gay. I don't care what his stances are. The fact is that he cares about family values, that he cares about reducing inflation. He cares about reducing government spending. He cares about increasing the education in this country and making our schools better. He cares about cryptocurrency and retail investors not getting shafted. He cares about money not being stolen by political parties and political agendas. And all of this looks good to me. So I don't agree with everything that he said, but I'll take agreeing with 95% of the things that he's saying and doing compared to what Janet Yellen has done for this country in the last, I don't know, however many years. Janet Yellen has spent trillions and trillions of dollars in laundering money overseas, in foreign wars around the world. Afghanistan, Iraq, Iran, even Gaddafi in Libya and Africa. We've seen it time and time again. Ukraine, Israel, Gaza. The money just does not stop flowing to the American war machine through the Democrats under Janet Yellen. The majority of it is being laundered specifically for the purposes of sending it back to the Democratic Party, to sending it back to the companies owned by the people in the Democratic Party. That's why Bill Clinton went from having a net worth of $1 million when he became president to having a net worth of $250 million today. Same goes for Obama. Same goes for pretty much every single president since Ronald Reagan, except for Donald Trump. Donald Trump, before being elected in 2016, was worth around $3.8 billion. And today, after all the political lawfare against him, is currently worth $2.6 billion. Still, that's 2,600 millions. That's a shitload of money. But Donald Trump is the only president to have lost a significant portion of his wealth. And that shows me that he has our best interest in mind. And he's not just out trying to send as much money overseas for the purposes of enriching himself. Cheers, ladies and gentlemen. I wish you a happy Thanksgiving. Happy Black Friday. Wolfie says, I hope you all have the very best Thanksgiving ever. To all my friends across the pond and all my friends across the pond in the UK, Europe, I wish you the best as well. Looking forward to hanging out with you guys here further. And make sure you guys look into Lit Exchange if you haven't already. I know a lot of you are already invested in the company, and I appreciate your support, your trust, and I'm extremely happy to be your partner in this endeavor. In case you guys don't know, you can go to litexchange.com, get more information about the company. We are literally empowering retail investors by creating an upcoming stock and crypto brokerage through this fintech firm, Lit Exchange. The purposes of this company is to prevent market manipulation that occurs via payment for order flow and dark pools. The same payment for order flow that is used every single day by companies like Robinhood and Schwab and Webull and IBKR and dozens of others, including Fidelity, that allow them to sell your orders to the highest bidder, like Citadel and Virtue, so that they can then front-run your trades, so they can make money off of you, so they can fail to deliver, so they can suppress stock and ETF prices in their dark pools. And of course, Gary Gensler's not going to fix it. We know that. So we've got to take care of that on our own. Go check out our SEC Edgar filings on their website. You can go check out the FINRA approved funding portal and licensed broker dealer, Silicon Prairie, where we are hosting our Regulation CF crowdfunding campaign under the Jobs Act. And you can become a founding member by investing in our founders program to own equity shares in Lit Exchange and receive a plethora of benefits that will never be available again. Cheers, my friends. I wish you peace and wealth. Have a great rest of your day. Thank you, everybody, for joining us today on the channel. Don't forget to drop a like. Do it for the channel, not for me. Il Mostro Verde, likewise to you as well. Samony, likewise to you. Have a great one. Happy Thanksgiving, y'all. Gonna be so goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
Yellen,
Cowboy.
give me the fucking money. Get the goddamn money printer out.
Great. Bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out.